Good afternoon, traders. Welcome to the afternoon session of my live trading stream. Let's take a look at where we sit and get a plan together for the afternoon. So right now the Dow is up 26 basis points. The NASDAQ 100 is flat. The NASDAQ composite is barely positive. The S&P is up 30 basis points and the Russell's up about 0.5%. VIX is down 0.5%, about 0.6%. The VIX futures are down 0.3%. The Dow futures are up marginally, 0.06%. The NASDAQ futures are down 0.25%. The S&P futures are up 25 basis points, also about 0.25%, and the Russell futures are up about 0.25%, almost 0.3%. So I have here kind of some of my favorite futures to watch. I've got the Australian dollar, the British pound, the euro, the Japanese yen, crude oil, the S&P futures, and then in this other chart I got across two charts just in interest of size. I've got gold, copper, the NASDAQ, the Russell, the Dow, and the 10-year futures on the 10-year Treasury. So what I'd like to do is just go through and just draw some, whether it's trend lines, like trend channels, or actual trend lines, because it helps me if I have something visual that kind of catches my eye if something's going to make a move. So that's a good trend line to watch. The Australian dollar looks like, and this is a common pattern that you'll see, what I call a coil. This one's interesting because this upper trend line here is very steep. But basically what happens is you see price action trading into this coil getting tighter and tighter until it reaches a point of tension, and then it's going to do one of three things. And when I say this, you're going to say, well, duh, of course it's going to do those things. But it's either going to break to the upside, break to the downside, or move sideways, which is what price action is going to do anyway. If it just moves sideways, that's important to know. Because there's the chance that you're going to see it now trading in this unwinding. This coil is going to unwind in a widening space, as you can see. Can get rid of these old drawings because they're probably not going to be very helpful. So here we now have, let's zoom in, the Australian dollar looking like it wants to break through there. Now obviously it's either going to break through there or it's not. And it looks like that bar just closed, because what I was about to say is you want to see what it does. So then the next question is, okay, so let's say it does break to the downside. Where's it going to go? Well, I think that, you know, this level right here has possibilities as well as right here. So either side of this pivot point, this is the midpoint of yesterday's move, so this pivot point is the first level of support. Now the problem I have is I'm not necessarily, if I look at stochastics, I see this and I say, okay, that doesn't look like a very powerful move to the downside shaping up. It looks like there's going to be a little bit of a retracement, possibly even crossing back up over that trend line. So now may not be the time. This is the British pound. Now there was this level of resistance which I drew before that I can just leave on there. So the idea is once I get these drawn, then I can just leave this up, and as moves are happening, like I can see where it is, for example, in this coil. You know, I would glance over here and I would say, oh, the Australian dollar just broke through the bottom of support. It's something that helped me right here on this on the euro. Just before we broke for lunch, I had been watching what the euro was doing, and here was a primary trend line, a secondary trend line, broke through the primary trend line, so that was a short to the downside, and then also broke through the secondary trend line, so that would have been a good short down to about here, which is right where it stopped. Like it traded a little bit below that, but those became closing prices on those candles. So where the euro is right now, actually, is it's retesting this level of support. It just did. And so this is a situation where having this still on the chart could be helpful because previous support becomes future resistance. So if this does truly bounce off of this level, where's it going to go? Well, it could bounce up there. Oops, I want to have the right drawing tool. Bounce off of there. So something you can do to eliminate confusion is, if I'm going to leave this on the chart, I want to change it to like this dashed line to show, okay, that was a past, that was once a trend line support that was violated. So I'm just leaving it on the chart as a reference point. Because this is the prevailing. Which in that case, in order to be consistent, then I'm going to want these to be solid, because I'm not considering these having been violated yet. And what's interesting is also this level of support, it just happens to intersect these trend lines where it just happens also to intersect where the trend lines intersect. So anybody that tells you that the market doesn't have memory and it doesn't like trade levels of support and resistance probably doesn't have a lot of experience using trend lines and levels of resistance and support, because there's just too much of this. I've seen this happen too many times to not buy it. And right now, this with the Japanese yen, and sometimes I might also throw a Fibonacci retracement. If there are any levels of resistance and support that are just, they don't make themselves apparent. Or maybe I should say, like, I just don't see it. Like, I don't see it anywhere. Then I might rely on that. So, and with crude right now, I can see clearly, here's a past level that was broken. So if we check back on the Australian dollar, because I just saw it out of the corner of my eye, so that actually was a good short play. And the fact that we missed the move confirms like it's important to have these things done before you need them. And as it looks right now, this fall could continue because it's got a long, I mean, next stop would be here. And then here. And all this is taking information that the market's giving you for free and interpreting it. Now, right now, we've got a potential bounce. So we may have another opportunity to short this again. Because looking at the 15-minute and the 1-hour chart, you know, they are showing bearish stochastics. If you want to zoom out even further on a 4-hour chart, you know, that's an even stronger signal because this is a bearish move that's just starting. And of course, just starting is always relative, right? Because if you look at the day chart, it's like, well, that started a while ago. Oh, that wasn't the day chart. Hold on, I'm sorry. Day chart is like, well, actually, it's an up move just beginning. But within a move, you know, I think one thing that you've learned is as you drill down, you start to see different level. Every different level is a different reference point. It gives you a different big picture. So which one you look at, which one you pay attention to, is determined by what kind of a trader are you? Or how long are you going to be in the trade? Are you going to be in the trade for a few minutes? Or are you going to be in the trade for a few days, a few weeks, a few months? The longer you're going to hold on to it, then the further out you need to zoom as your main reference. Like that needs to be your primary reference point. So what we're seeing here on the 15-minute chart is, okay, it came down to this 243 MA, and now it's going to be a bounce off of that. Bounce where? Right there. So that's our big picture, and the fact that we're seeing move down here, move down here, move down here, move down here on these currencies tells me that that's a function of dollar just spiked up, because these are all dollar denominated. And if I look at my indices, the dollar is up 66 basis points, so that's strengthening. That's a strengthening dollar. And I'll bet you if I look at gold, gold is going to show the same thing. Yep. Now that's not always 100% true. I mean, every once in a while you'll see an outlier. You'll see 4 currencies make a big move down, and then one of them defies that move. It's like, well, that one's operating then on its own fundamentals. I mean, that's how you can tell that this, whether a move like that is, especially when you're looking at the currency futures, because that's all dollar denominated. When you look at currency pairs, that can be a little bit more difficult. But if you look at the same pairs, like if you look at everything paired against the yen, that's your reference point. Oops, don't want to do that. Now I get that this trend line cuts through here. I drew this because it's a best fit trend line, because there's a lot of points where it touched. So that tells me that this kind of move down was just sort of an anomaly. And if we were to take a look at, this was probably Wednesday. Yeah, this was Wednesday morning when the CPI numbers came out, and the dollar shot up because the CPI numbers looked hotter than expected. But that caused gold to plummet, and then it recovered. So I'm not saying you disregard this move, but I'm okay cutting through this in the interest of drawing a trend line that is my best fit trend line. You don't want to be too legalistic about it. Like, look, you want to be realistic. That's why it helps to have a pretty good understanding of events. Like, pay attention to the economic events for the week, so that when you come across something like that, you can say, well, that was a pretty big spike down. Like this trend line, it would have blown right through there. What caused this? Oh, that was Wednesday morning. That was when the CPI numbers came out. So, okay, now I know. So in this kind of a situation where this is the trend line that makes itself apparent, all right, it's one that's already been violated. So if I'm going to look for levels of resistance and support, first I can look for just the horizontal levels of resistance and support. So there's this one right here, which I just kind of eyeball. But then I'm also going to zoom out. Here we go. So now that this is time consuming, yes, but remember what I said, there's a lot of information that the market is giving you, a lot of information contained in these charts. So unless you have, like if you have the talent, like you can just look at it, you can see the patterns, more power to you. I'm not that person. It helps me to make these drawings on here, because then I can just take a look at it and okay, here's my snapshot. This is all that information contained in a little section. See, that's helpful. That tells you that this was also past resistance, past support. That just makes it stronger as a level. seeing that this moved down. Ah, come on. Ah, which jumped the gun. Yep, broke getting my way again. Just all kinds of silly restrictions for my protection. So now what we're starting to see is this retracement. But it's failing right now. See, and that's where it gets real tricky. When you're down here, it's very tempting for me to say this is going to snap back and retrace, which it did, but it doesn't necessarily go all the way back up here. Like, it just depends on how much selling pressure there is. Okay. So this is one I might watch. I mean, even though the Russell used me and abused me this morning, there's some information that's helpful. And it is showing its own potential retracement. Compared to the NASDAQ, you know what we just saw there? So you don't want to you don't want to have your attention so divided across like 12 different futures that you can't focus on any one. By the same token, it is helpful, especially when it comes to some indices that are correlated. Like, they're not perfectly correlated, but they're highly correlated, to kind of see, like in this case, what we learned is, okay, the NASDAQ seems to be kind of like leading the way, like the Russell, I don't want to say it's following the NASDAQ's lead, but we're seeing the same retracement in the NASDAQ that the Russell was just about to show. That it was signaling. And sure enough, right, it's following through on that. So we want that move to complete before we make a stab at another play to the downside. So now that we've gone through that exercise, we now have this, got very just quick visual reference point. Ideally, you'd like draw these either before the market opens, or you draw these before the market opens and just kind of update them for the day. So right now we're seeing this play to the long side, which if we get a close above these two moving averages, that's a stronger signal. Or if I want to take a risk, because I suspect that it's gonna close above that, because the hard part is if you wait for it to close, you may have missed the move. And see right now, so that's where I trail my stop up. So that if my suspicion is right, and it does backtrack, then at least I didn't have to pay as much for the information. Because right now what's shaping up is this right here. And it's tricky because I've seen situations where it's been way overbought like this and it continues going up, and I've seen situations where it's way overbought like this and it does indeed plummet. And I would look here, but this is the fact that this slow stochastic is kind of on an upward trend would tell me that there's some lift there, but it's kind of squishy. You got this here, like this tells you, okay, lift here. This is telling you that there's a little bit of lift. And quite honestly, I would much rather just wait. Then you get a situation like this where it defies explanation. It's like, well, then all I can really do is just kind of put in a buy here. And I don't know what it just did. It just cost me money because that order was not supposed to execute. That order executed at 67.94.50. And the limit order was set lower. So now we're getting, sorry I was quiet, folks. I was actually reviewing the footage, and that was something that the software should not have done. think at this point, I'd rather be short than long. So what that really means is I'm looking for setups where I can sell, where I can short this contract and get a good trade location. Although, I don't know right now. I mean, this is kind of telling me a different story. It feels good to be in a good trade, you know. Of course, then you're always worried, like, don't quit on me. Don't quit on me. Right now, this price action is so volatile, you just can't afford to give it a chance to steal from you. So I really didn't get a chance to look at the options plays I'd mentioned earlier this morning, the Russell, the Japanese yen, and oil USO, and I don't know, quite honestly, that I want to go into the weekend with those trades on. The encouraging thing is that the Russell is, right now the best performing index in the cash markets, as well as the futures. So that's my IWM or IJR, which is IGR is the one I had before. I mean, look how choppy this action has been. This is just a mess. Booyah! Now, make sure I get rid of this. I don't want to get a surprise. Best practice is to, when you want to set a profit target and a stop loss, you want to use a one cancels the other so that when your profit target gets hit, it cancels your stop, or if your stop gets hit, it cancels your profit target, or that way you don't have an order hanging out there that you forget about. So I managed to just about erase my losses on the NASDAQ today. I still have 235 in losses on the Russell that I need to offset somehow. I don't care if it's in the Russell or if it's in the NASDAQ. It doesn't really matter to me. You don't revenge trade like, oh, Russell took $235 from me, so I'm going to get it back. No, steal it from somewhere else. I mean, you don't have to collect your 235 from the Russell. You can get it from the NASDAQ instead. It doesn't matter. It's, a dollar's a dollar. Boom. So now, $235 loss, and the Russell's now 125. But then I got to add another 60 in trading costs, so I've only got 45 minutes left in the trading day. Okay. Facebook has been a disappointer today. It's down almost $3. Okay. Not good. That is just such a weak move. Pathetic. Absolutely pathetic. Once again, it's just this half-hearted attempt, like not even trying. Just pathetically weak. Just pick a direction already. It's a lot of effort to wind up where you started. So the mental note is, and this gets back to my whole, efficiency in trading. I am not demonstrating that right now. See, it didn't even give it a chance. You can't be trusted. So as we head into the last half hour of the trading day, what's interesting to observe in the cash markets is that the Nasdaq 100 is basically flat on the day. The Dow's up triple digits. It's down. It's up triple digits. The Nasdaq Composite might as well be flat. It's up 6 basis points. The S&P is up 0.3%, or 1/3%, and the RUT is up. It's the leader of them all. It's up 61 basis points. What's interesting is the weakness that the Nasdaq and the Nasdaq 100 and the composite are showing, because of what I said earlier about how in this recovery they've run up I think they've run up too fast, far too fast. They've traded back up outside of their long-term price channel, which is not where they're supposed to be. There's no evidence that a new price channel is forming. This is just it's buying that shouldn't be happening, in my opinion. Which, if I'm going to eat my own dog food, that means I got to get rid of Facebook and Autodesk, because I don't like having them being a part of the Nasdaq. And if you look at the futures, once the mini RUT's up 30 basis points, the mini Nasdaq is down 30 basis points. It's the only one down right now. Now, volatility is up 2.5%. Volatility futures are up 0.7%. The RVX, which is volatility of the Russell, is also up. not a whole lot more than the volatility on the S&P. See, and right now the Russell's looks like it's showing some weakness, and I would bet you if we look, we would probably see the same thing in the Dow and the NASDAQ and the S&P. You know, I don't think anybody wants to be long going into the weekend. S&P deteriorating. Okay. So the reason why I took that short, and I should have stayed in it, is the fact that you have these three moving averages, the 9, the 27, and the 9, the 81, and the 27, all bunched up together. Price action is below that. You've got clear blue sky all the way down here to the 243 period MA. So you don't really have a whole lot in the way of resistance from a technical standpoint, from a moving average standpoint. I mean, if you really wanted to, you could like go through here and draw like levels of resistance, but this is such a mess. That's a pointless exercise. Like you could go through and draw these levels of support and resistance based on where it looks like, but this is just such a mess. There's really no point in doing that. I mean, if anything, we might just get rid of this. And draw a trend line. Trend line. And say, okay, that's your support and resistance. Okay, I guess I have to click on it more than once. So a trade down to this trend line is either going to be a bounce back up, which right now that's what it's looking like, or a breakthrough, and if it breaks through, it's going to come all the way down here. That's your short opportunity. On the other hand, if you trade up here and you break through, then you really got nothing above you. Except some levels of resistance that you can draw, because it's not a mess up here. It's a total mess down here. And right now you're seeing this act as an effective level of resistance. The problem is, I mean, yeah, you could short off of that, but let's say you get it right, so you trade down here, and then it bounces back up. It's like, wow, you got to be really fast to catch that. And even if you do put your order in, who says you're going to get a fill? Really, it almost seems what would just make more sense is just I don't want to do it that way. At 27.34, Now, as I think about it, like somewhere around here is a level that the bulls need to defend. Somewhere around there is a level the bears need to defend. And now we are 30 seconds away from the most volatile time of day, because it's 1:44 and 34 seconds. 3:44 on the East Coast. And you know that's a time of day I do not like to trade. And I decided to take those orders off the table quick, because if you saw that shoot up, that changes the whole picture. This is now a bull run. I did get a fill. Got some buyers stepping in. Put that stop there, because if this move to the upside doesn't happen immediately, it's a bogus move. I'm beginning to suspect, yeah. Thing is, if all this is going to do is just trade back and forth through these moving averages, there's really no point. And at least for now, the bears were able to defend this level. That vertical line represents the end of trading for the week. 3 o'clock futures will pause at 4:15, resume at 4:30, and stop for the weekend at 5 Eastern Time. So right now, all this is just, just coiling. Facebook is improved. It's not down. It was down almost $3. It's only down $2.15 now. The NASDAQ and the NASDAQ Composite are both now negative in the cash market. Okay, I don't know why that was necessary. Again, if this short doesn't manifest itself quickly, it's a bogus move. Okay. That would have been one we're staying in. 20 seconds to go before the closing bell rings on the cash markets. The NASDAQ 100 down 33 basis points. The composite's down 0.2%. Dow's up barely, 10 basis points. The S&P's up barely 5 basis points. The Russell's the only one really showing gains. It's up 40 basis points. Now the Russell and the futures really not holding on to any of its gains. And now we're getting really, closing bell just rang. Now we're getting these wild, wild price swings. You know, anybody who open a trade here at your own peril, because this is dangerous. Now it looks like it's settled out a little bit, and it looks like, I mean, these could still adjust, but this looks like these are the final numbers for the day. So the Dow up 8 basis points, the NASDAQ 100 down 36 bips, the NASDAQ composite down 23 bips. So the Dow and S&P up barely. I mean, gave back most of their gains for the day. The Russell off of the highs, but at least respectably was able to hold on to 6 points and change. VIX up, but not a lot. The dollar up 63 basis points. Gold down. Crude back up over 61. It's at 61.52 right now in the futures market. That's crude. So if I had to predict, and this is just a guess, and I'm not doing anything with this, I'm not going to make a trade, and I wouldn't if I were you either, but I'm guessing that when these markets open at 6 o'clock, or sorry, 5 o'clock Eastern on Sunday, that the S&P, and probably the others, but at least the S&P is going to be down. Because this is not a market that looks like it has a lot of confidence going into the weekend. So yeah, it's just gonna be a lot more of this chop until we get the break at 2:15. I'm not staying on. That's just kind of what I think. I'm gonna be looking at my VWO. I might even, if I have anything worth writing about, I might even write about it on Seeking Alpha. There will be a Trader's Espresso weekend edition. You can count on that. So look out for that tomorrow, Saturday. Along with a video edition. But other than that, it's been an interesting week. So I hope that you all have a great weekend. Think about something other than trading this weekend. And we'll see you on Tuesday. Don't forget, Monday is a holiday. It's President's Day, so there won't be any Trader's Espresso on Monday. I'm pretty sure the futures markets open Sunday. But the cash markets will be closed until Monday morning because of the holiday. So have a great extended weekend, and we'll see you next week.